Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you one stock that is now trading at its all-time lows. I'm going to go ahead and give you a step-by-step detailed walkthrough of what this stock is about, and most importantly, I'm going to show you how to use this stock in order to make consistent income. So if you are new to options trading, or you're trying to use options in order to make some additional income to help supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be giving you a step-by-step detailed video about KENVUE, ticker KVUE, and how I'm going to go ahead and use this stock in order to make consistent income. Now, you guys know how we like to do. We like to go ahead and get down and dirty with options. Now, by saying we're going to get down and dirty with options, all we mean is that I will be giving you a step-by-step walkthrough in order for you to be able to follow along with me. And if you so desire, maybe you could go ahead and use these strategies to practice in your own personal portfolio. Now, let's go ahead and get down and dirty. So firstly, we're going to be going to the Robinhood Advanced feature right here in order to open up the chart. Now, I like to start off on the 1-year outlook. So let's go there to see how this stock is doing. Now, as soon as I open up this chart, you guys could see this chart is a chart that I favor highly, and it's what I use most of the time in order for me to get into my option strategies. The reason why I favor this chart setup is because of where the current share price is compared to the 200-day moving average. Now, the 200-day moving average is going to be this blue line right here. And what the 200-day moving average tells us, it gives us an estimate of exactly where the stock has been trading for the last 200 days or 6 months. Now, over the last 200 days, KENVUE has been trading around the $21 level. Currently, however, its share price is at 16.52, which is way below the 200-day moving average of around $21. So I like this setup. The reason why I like this setup is that it shows me that the current stock has more upside than it does downside. Now, can the stock continue to go down? It absolutely can. But this just shows me that it has more upside to downside, and that's a risk that I'm willing to take. Now, we're going to go down right below that to what's known as the RSI, and I have the RSI 50 set up right here. So we're going to be following this line right here. This line right here represents your RSI, or your relative strength index. The RSI is what's known as a momentum indicator, and what it does is that it shows you whether a stock is being overbought or oversold. Now, the RSI goes initially from 0 all the way up to 100, but what we really pay attention to is the movement between the 70 RSI and the 30 RSI, with the middle point being the 50 RSI. Now, KENVUE right now is trading at an RSI of around 36, which is below the middle RSI of 50. So this tells you that this stock is actually going into oversold territory. Again, the stock is being oversold, so it shows me that it should be more upside than there is downside. Now, as you can see here, the stock has no clear support. It has not found a bottom as yet. So this is a high risk stock, and like I said before, the stock could continue going down. Now, if we go up to the top and we're able to find a resistance, we'll see that the resistance is right there, almost exactly the same pinpoint with the 200-day moving average, which is going to be around $21. So I would be looking for the stock to go back up to $21. And in my mind, my personal thesis, I think $21 is the fair value for this stock. Now, this gap right here, this drawdown right here, there's a reason for that, and I'll explain the reason as the video goes along. Now let's go back to KENVUE stock so I can give you some additional information in order for you to come up with your own thesis for this stock. Now, one last thing, let's go out here to the 5-year outlook, and you can see that this stock actually IPO'd on May 4th, 2023. So this stock is only about 2 years old. So I know what you're asking yourself, why do I have so high conviction of a stock that's only 2 years old? And you will see as we go along. Okay, so here we are on the about section, and the about section I think is really, really important. So I'm going to show you right now. So as it says here, KENVUE Inc. is a consumer health company which engages in the manufacturing and selling of healthcare products, which includes cosmetics, drugs, and medical devices. Its brands include not only Aveeno, but Band-Aid brands, Johnson's, Listerine, Neutrogena, and most importantly, Tylenol. Now that we are on Tylenol, I'll give you guys a little backstory of the Tylenol. Right now, the reason why you just saw the stock price is at all-time lows is because of the Tylenol brand. The Tylenol brand has been associated with some negative outcomes in some patients. So right now, the company is in a lawsuit. This is a healthcare company. Healthcare companies are always in lawsuits because that's just the nature of the business. So do not let that be a deterrent for you. Go ahead, do your own research and come up with your own conclusion based on your thesis. Now let's go ahead and we're going to go down some more in order for us to cover the key statistics. Now here is a very amazing statistic. The current market cap of KENVUE is $31 billion. However, the total revenue for last year, 2024, KENVUE brought in $15 billion. The company actually brought in half the amount of money as its market cap. That, I think, is an amazing, amazing statistic. Now, currently, the PE ratio is sitting around 22.31, which I think is pretty decent. In the healthcare sector, the PE is kind of wide. So it goes from as low as 15 all the way to the top side of 40. So KENVUE is sitting right closer to the lower end of 15. So I think that's really, really good. Now, the dividend yield. The dividend yield is around 5%. So KENVUE does pay around 83 cents per share. So that means if you do own 100 shares, you're going to be getting $83 every quarter. Or if you translate that into monthly, you're going to be getting around $27 on a monthly basis, which I think is an extremely good dividend. And I also think because it's only 5%, it is definitely sustainable. Now let's go down to the 52-week high. The 52-week high right here is $25.17, which represents the exact same price that the stock IPO'd at. So once the stock IPO'd at $25, it just kept going down and it mellowed off at around the $21 mark, and now it's going down because of some lawsuits. Now the 52-week low, on the other hand, is sitting at $16.07. The 52-week low is a lot closer to the current share price of $16.52, and you can see the share price is just going to fluctuate a bit because the market is just starting to open right now. So the 52-week low is way closer to the current share price. So once again, that's another sign that tells me that this stock has more upside than it does downside. Now we're going to go ahead and we're going to jump into two more facts, and that's going to be the trading trend. So based on the trading trends, if we look at the Robinhood retailers right here, you can see Robinhood retailers are all over this stock. Now kudos to the Robinhood investors, because of technology, we have enough information in order for us to gather our own conclusions, and Robinhood has been eating up this stock. Moving over to the hedge funds. The hedge funds too have been buying up a lot of this stock. So that tells me both us, Robinhood retailers, and hedge funds are extremely bullish on this stock as well. Now let's go down one more and we're going to go ahead and highlight the analyst ratings. Now the analyst ratings here says that this stock overall is a strong hold. 60% of the analysts saying it is a hold. Now it's not a buy, it's not a sell. Now, based on my own conclusions, I could tell you I disagree completely with the analysts. I think at the current level, the stock is absolutely a very strong buy. Now, I just highlighted that the stock did not show that it has a bottom as yet, so it could continue going down. So what I would do, and I did make a video right before this, and I showed you two option strategies that I will be using with this stock, and I will go ahead and show you a third one. But based on the last video, I did show you that if I were to get into the stock right now, I would be using what's called DCA, or dollar cost average, meaning I'll be buying this stock little by little on small increments in order for me to grow a portfolio. Now let's go ahead and we're going to go to the last thing before I get into the option strategy, which is going to be the research report. Now right here, based on the research report, you can see that this stock has a 5-star rating based on Morningstar. 5-star rating, I do not need to tell you, that's a very, very good rating. Now, One more thing is going to be the fair value. The fair value is $24.50. I did show you that the 200-day moving average is around $21, and I also think the fair value for this stock is $21. However, the professionals, the analysts, they think the stock has a fair value of even way more than what I think it has. Now, lastly, it's going to be the expected earnings. The earnings is going to be on November 6th. So whenever you decide to trade a stock, you always need to know when the earnings are. Now we're going to go ahead and we're going to get into the options. So let's go ahead now to trade KVUE options down into the bottom in order for us to go ahead and open up the options chain. Now that we are on the options chain, all this information down here in its entirety represents the option chain. What the option chain does is that it gives us enough information in order for us to make a very informed decision before getting into any options contract. Now, speaking of option contracts, I want you guys to do yourself two favors before I go ahead and jump into this option strategy. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio may not work for your portfolio. The second favor you want to do yourself, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, then at least you could get out of the trade. And I will be showing you my entry. I will be showing you my exit strategy as well. Now, I did mention before that I did a video right before this and I showed you two option strategies that I would use. The first option strategy was a DCA model, and the second option strategy I showed you in that video, which was a leaps option, which was more precisely a call leaps option. Now I'm going to go ahead and show you a third option strategy that I can use for this stock. And for that, we're going to go ahead to sell. We're going to go ahead to put, and then now we're going to adjust our strike date. For this strike date, I'm going to be going with September 18th, 2026, and that's going to give me around 355 days to expiration. The reason I'm going with this expiration date is because, once again, I want to give myself enough time in order for this trade to work in my favor. And secondly, the reason for my strike date is because I already have my exit strategy in mind. My exit strategy is to get out of this trade when I'm 50% up on the trade, and you will see what I'm talking about as I go along. Now that I have sell and I have put and I have my long dated expiration date, I'm going to go ahead and I'm going to choose my strike price. I'm going to choose my strike price below the current share price, and the strike price I will be going with is going to be the $13 price. The reason for me going with the $13 strike price is because the stock has not showed itself to have a bottom as yet, and also it has never hit the $13 strike price. Now, because the $13 strike price is in the money or way below the current share price, I feel more confident choosing this strike price as opposed to the one right above it or even the one right below it, although the one right below it is going to be good as well. Now, with this strike price, I have a chance of profit or a chance of this trade going in my favor of around 70%. Now, because this is a sell option strategy, I'm going to be getting paid as soon as I decide to execute this option. The amount I'm going to be getting paid is going to be $1.09 in the option world. However, in the real world, this is going to equate to $109, and that's simply because each option contract does contain 100 shares. So you're going to multiply the premium you're going to be receiving, which is going to be $1.09 by 100 shares, and that should net you $109. This option strategy right here is known as a LEAPS option. LEAPS stands for Long-Term Equity Anticipation Securities. It is a mouthful, hence we just use the acronym LEAPS. Now, there is two types of LEAPS option, which you probably figure out by now. You do have your call leaps, and in this case, we have our put leaps. I usually do not use the put leaps, but this stock has given me an opportunity. Now, what you're going to do for the exit strategy for this leaps. So the amount of credit I'll be getting once I do this is going to be $109. My exit strategy is going to be to close off the trade whenever I'm up 50% or whenever I'm up $55 or more. Now, this is how this is going to work out. Anytime before September 18th, once this share price keeps going up, then you're going to be up on the overall of this trade. Now, whenever you're up on this trade, let's say the trade goes up to, let's say tomorrow it goes up to $18, you're probably going to be up on this trade probably around 30 or 40%. Once it gets to 50%, I'm going to close off this trade. I'm going to lock in my investment gains. And there's three things I'm going to do once I do that. I'm going to rinse this strategy. I'm going to repeat this strategy, and I'm going to keep locking my investment gains. Now, the reason why I went ahead and choose this long expiration date is that I have zero intention of waiting until this expiration date materializes. I will be closing out this trade far before that, whenever I hit 50%. And like I said, rinse, repeat, lock in your investment gains. So there you have it, investors and future investors. KENVUE right now, in my humble opinion, I think this stock is at all-time low and the stock is extremely undervalued. The reason I base my thesis off of is the amount of revenue this company is pulling in and also the brands that this company is offering. The brands this company is offering give it an extremely remote moat, so to speak, which means the barrier to entry into this company is very hard. Now, because the stock is at all-time lows, there is opportunity to be had. There are several different option strategies that can be used in order for you to make consistent income with this stock. I'm going to go ahead and link the video I make with the first two option strategies. I will link that video in the description below and probably also in the comments. And the third option strategy I'll be using is what's going to be known as a put leaps option. My intention is to get into the leaps option and also do not let it go to expiration. It can go to expiration date. You don't have to worry. You're still going to win. But my whole point is to use this exact option strategy just to keep making consistent income. If you guys have any questions about the option strategy I showcased for today's video, or any questions about KENVUE and the product offering has, feel free to let me know in the comments below. If you guys know of any stock that you think are trading at all-time lows, let me know in the comments below. I'll go ahead and make a video just for that. Now, for those of you guys who made it to the end of the video, you guys are the real investors and future investors. The whole point of me making this free content, is to try to help as many people as I can. So if you guys know anyone out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.